So in this lesson, we're going to go through the backtesting process. Now, very simply, backtesting is simply just bringing or reloading, I guess you could call it, replaying price even back to a certain point in the past, and then you're essentially playing price forward to try and simulate as close as possible to a live market environment to then actually test out your plan. But sort of more so execute or practice executing your plan, trying to practice that skill set as much as possible, trying to replicate how it would be in a live market, but with the obvious massive benefit that we can play price forward at a much quicker pace than what we would have to wait, obviously, for those candles to print in a live market, right? So that means that we can kind of gather experience a lot more quickly, right? A lot more effectively and efficiently compared to having to just do it in a live market, kind of with those daily markups, right? In the forward testing sort of phase of our testing. So that's kind of the main benefit of backtesting. But kind of in my opinion, and the reason why I've kind of suggested you do backtesting last in the sort of 3-stage process, or anytime you're testing out a plan, it should kind of come last, is because really it's kind of quite difficult at this point when you're trying to be testing. You need to have a pretty refined and solid plan that you have a very good understanding of, that you know how to execute. You have a really good idea of it. You've seen tons of examples, so that when you're now backtesting like this using bar replay and you're trying to simulate a live market environment, you actually know what you're looking for, right? And this is kind of just trying to get that last little bit of practice in as near as possible before you actually kind of start to trade it in a live market, whether that be on demo or an actual real account. So that's why I say, yeah, at this stage, make sure you've collected plenty of case studies. You've done at least a few weeks of markups, and now you can kind of start to refine this and get even more practice. So there's kind of two ways in which you can kind of pick a date in which to actually load price back to. One way would be, if you're kind of being very hardcore, would be to kind of flatten out price and then just pick a random day here to go back to, just so you don't know it's going to be an up week or a down week or whatever. You don't need to be that hardcore when you're kind of first starting out. Just pick a week to test, because that's kind of what I would do when I'm sitting down to do a backtesting session. I would kind of just say to myself, right, I'm going to backtest a week's worth of price action, obviously just focusing on the London and New York, or maybe just the London session or whatever session you trade, right, and then just do that for the week. So if I go to this candle, so that says the 3rd of September, the next one is the 6th, so that means there was a weekend in between those two candles, which means if I load it back to here, this should be the start of the week. So now what I would do is just follow my usual mapping process, right? Put all my analysis on the higher time frames, go up to the weekly as well if you want, then go down to the 4-hour chart, again follow the same process, do all of your mapping and analysis. Not going to do it now, just for the sake of just showing you guys the actual process, rather than going through all of the analysis, and obviously drop down to your medium time frame, and then do all of your analysis here. Now, the way that I would do this is I would kind of stop on this time frame just for a minute, and what I would do is, you can see the next candle will be the start of the week, right, when the market opens, which is 10 p.m. London time. And what I would do is if you hold shift and the right arrow key, that will load candle by candle, or of course you can press play down here, right, and it'll play it forward, and here you can adjust the speed for how many bars load, or you can load bar by bar with a click here if you don't want to use the keyboard. So yeah, like I was saying, what I would do is I would just fast forward this to around 6:30 in the morning, as that's about the time I'm usually getting to my charts before the Frankfurt and then the London Open. So I kind of want to be ready before that volume starts to kick in, right? So what I would then do, obviously I would, in a live market, I would have already done my analysis, and I'll just be tidying up anything that potentially happened over Asia. And then, yeah, now this is kind of coming in towards the kind of European Open and the London session, and this will be my, pretty much designated trading hours. So now that we've got to there on the 15-minute, just assume that I've drawn on all of my analysis, I would then drop down to my execution time frame, right? Now, let's just say, I've just drawn on this box randomly. Let's just say this was, I'll just draw it over here, right? Just for the sake of speeding this up a little bit. Let's just say that this was a 15, an M15 POI, right? What I would be doing now is essentially, like I would in a live market, set my alerts on that box and wait for price to, tap into that box. And I would play price forward, and then I would just look to see if my entry model sets up. Now, let's say that a trade had set up, obviously it hasn't in this case, but let's just say, we got an entry signal, and then I'd be taking the trade. I would just, size up like this, however, whatever my trade plan says, right? Think about where you're going to be targeting, etc., etc. And then, yeah, just literally play price forward, see how it plays out. Obviously, draw your analysis that's going along, look for your scale-ins, whatever your trade plan is, right? But obviously, you're just trying to simulate that market environment, but whilst backtesting. So there's not really too much else that I can think of to explain it other than that. Obviously there are kind of multiple methods and ways you can kind of follow with backtesting, but ultimately it's just going to depend on what your trading style is, what your trading setup is. Obviously here I've shown you, it's based on kind of the 4 hour, the 15-minute structure and POIs mainly, and then waiting for the lower time frames to enter those POIs. Then look for my entry models on the M1, right? Then I would just look at my trade plan and follow the management plan. Then I would record the outcome of the trade. And that's it. Obviously, if you're someone who's a bit more high on the higher time frames, follow that same process, but on those time frames. Or maybe you're just looking at M15 risk entries, then of course you wouldn't really go lower than the M15, unless you're obviously using the M1 potentially to refine your M15 zone in order to put your limit orders on, right? So imagine this box was the M15 box, and then you might drop down to the M1 and go, actually, I want to set my my risk entry within the M1 up on that zone there. And then you'd be looking for, testing that sort of strategy, right? Just adjust this kind of slight method to whatever is going to work for you. And yeah, then I would just play price forward, however I did for the London session. I would mark it all up, leave my annotations on, maybe, use some of the text boxes and just, really study price action. It's not a race at all. You really want to be learning and getting the most from it, rather than just blasting through and kind of just saying, what result did I get at the end, okay? Try and learn as much as possible as you go through. Obviously, if you trade New York as well, then do this throughout the whole of New York. And then kind of when you get to, for me personally, kind of when I get to about 3 or 4 p.m. London time, it's kind of the end of the London-New York crossover. I don't tend to usually trade for the most part outside of those hours. So then what I would do is I would jump back up to the 15-minute, and then I would just literally fast forward price until I got to the London session of the next day, right? So there we go. That's kind of towards the end of New York. This is into Asia now. Just zoom in, and then I would literally you guys don't really know what's going to happen, right? Just load up to about 6 a.m. and then that's where I'll be the next trading day, right? And then I would do my analysis, right? Make sure everything's up to date on 15 minutes before I have a quick look at the daily, see how that's looking, and then I would again drop down to the M1. I would obviously be able to see where those POIs are, and then just play price forward into those POIs. Or of course, you don't even have to do that. Let's just say, let's say you were waiting for price to either come down into this area here. I'm literally just making this up as I go along, but imagine you had these two areas, and for now you weren't going to literally look for anything until price gets to there or there. Of course, you don't have to sit on the M1, you can just play it forward a little bit here quicker, right? But obviously what can happen is price can get there quicker than you think, and then you see price play out. So that's kind of why I prefer to just stay on the M1, just so I can see price as it comes into here, and then not see how it played out as much as possible. So that pretty much wraps it up in terms of how you then can record the data. I've made another obviously section in the testing section in your dashboard. So if you go into backtests, and this is kind of where you have sort of 2 options that I've kind of put there for you guys. And it's pretty much just based on the 2 methods that you've seen in both case studies and the forward testing with the markups. So basically it's going to just be which way you prefer. Either you kind of want to use the spreadsheet method, which if you preferred that, kind of collecting a bit more quantitative data, right? Your confluences and stop loss sizes and things like that, and then you can put in your screenshots and whatnot in here if you just click that and populate that template. Or maybe you would prefer, if I go back here, to use kind of the calendar example, right? And you can do a week's worth of testing, and then you can chuck it in here like that. So you've got the higher time frames, put in any trades you took in London, trade in New York, and you may prefer that. You may prefer one way or the other, or maybe you guys can come up with some sort of medium of the two and come up with something a little bit more creative. I don't know, but as always, with these processes, something I believe massively is you're trying to somehow. Sometimes it's boring, right? Testing can be boring, but you need to try and make it feel like play as much as possible. And if you make the admin side of it, which is probably the worst side of it, right? If you can make that a little bit smoother and easier and more enjoyable, then it's you're more likely to keep doing this, and ultimately that's going to benefit you and your trading, right? So if you want to generate another fresh spreadsheet, click that one. Obviously, if you want a fresh markup one, click that one. And that kind of, you guys should know how to use these by now. The only thing I'd probably say about this, it is the same pretty much the same spreadsheet template as the one from the case studies section. But when you are backtesting like this with bar replay, you may want to collect even more statistical data, and you may want to add in some more columns here. Like you may want to have a column on, entering on the EQ, entering on the distal, or whatever, using a fixed stop loss size, and collect a lot of data. How far did the trade peak? How could you have managed it better? Like potentially have different R columns for different management styles, so you can start to test them, right? That way, if you want to do so, right? at that point. It's just some food for thought. But that's kind of as simple and as complicated as backtesting really needs to get, in my opinion, when you're using TradingView. Kind of in summary, set out to maybe do set up a time frame, whether it's 2 or 3 days, or maybe you want to do a full week's worth of price action, and then obviously the way I would do it is just fast forward price until the London and the New York session, and then speed it through to the next day. And just record it that way, and just make sure you are reviewing it when you're done. That's kind of one key point I will make, is when you do get to the end of your backtesting session, probably the most important thing to then do is literally zoom out and go back through all the sessions that you've traded. Obviously then as well, where you can see the benefit of how the whole week's worth of price action played out. Because let's say, I don't know, you took a trade here on the Monday, and let's just say you took nearly all your profits here, but just imagine, obviously it didn't happen here, but just imagine that then through Tuesday, Wednesday and Thursday, price just continued melting down. When you then look back at it and you're reviewing that whole week, you can go, well, actually, I'm leaving a hell of a lot of profit here on the table, and they're the types of things you need to study, right? Or maybe you found yourself, you just kept getting on the wrong side of the market. Like maybe you kept trying to short this the whole way up, and actually, we ended up having a bullish week and things like that. Just really dig into the price action rather than just blasting through it, just to say to yourself, oh, I did a week's worth of price action backtesting today. I'm working really hard. Well, yeah, you might be working hard, but you want to make that efficient and productive work in terms of how much you're actually gaining from that in terms of experience and lessons learned, etc. So before I rant on any longer, I'll leave that there. Hopefully the process makes sense. And you guys can use either way to record your data, and as always, please drop any of your own creations into the community, as I would love to see those. Enjoy.